All right. Good evening, everyone. It's here for Anumre Yabada Nyamias BM Ewo Akonya or the Mines. Anumre says sign to me day, yeah, sick asem program, no, at the bread, yeah, no. Where the first of all, you say, yeah, apologize for the long, you might be of course, so, Obia, we had to take a little break, but him say, even during the break, nneɛma bebree a yɛaka ho asɛm no na still na mode ɛyɛ adwuma ne adeɛ nti anwummere no yɛasan aba biam nti mɛma yɛnua Isaac mɛma no akɔ aba mɛma Dr. Wanso akɔ aba for debia no adagye a ɔmo anya wɔn a yɛn nyinaa no nyame adom yɛbɛnya the time no yɛnyinaa yɛsan ɛba na yɛne mu nyinaa no ɛbɛhyɛ saa dwumadeɛ wɔ. It is something that yɛda yɛakoma so. I mean, we feel very passionate about what we do and what we share with our audience. Nti anytime bi a yɛbɛnya biara no yɛpɛ sɛ yɛba ha sɛ nti Dr. Wa, I will give you the platform to welcome our viewers and anwummere wi a Penny Isaac will do the same thing, then we jump right into our topic for today.
Sure. Abusianfo, sure I know it's been some time since you guys last saw me into never be because of family and work and career stuff and see. So I mean but I'm glad saying that back now. I'm very happy to be here and I look forward to us touching base on all the different topics and being able to make a difference and make an impact and help you guys to be able to understand all you need to understand about money and different areas of finance. So happy to be here. Thank you all for your time.
Thank you, Doug. Yeah, and Penny Isaac, words to our viewers tonight.
So you can there have been so many things going on now. We are back again. So in the past, we believe that and then and in the future, the opportunities are if you been the Asia at the Sikasa Monkomon a bit me and a good instance or a tier for so. In other words, mobile opportunity to use in the Kakram the back.
All right, Penny Isaac, Dr. Wa, our financial doctors, Nyame Asset for the opportunity. Before we had that break, now can be effort taxes now it's taken us a while because tax concepts are very broad. I mean, in fact, you can even start like January 1 here by December now because very broad and very complicated, but we're doing our best and as much as possible you're breaking it down. Now, throughout the year, when your information be from what we are sharing here, it's never too late. Once you have information, one say, no, maybe I'm not doing this or no. It gives you the opportunity also say, adjustment to be your friend is when you're my home. You can about in fact say your boss about our W4, how it impacts your tax at the end of the day and the amount of taxes that we have to pay near there. You're spending more time to know about the different filing statuses and so some of the misconceptions out there, especially when it comes into head of household and then married filing jointly, even separately near there. Penny Baako and Penny Dr. Wua to explain into details about who qualifies for what. It's not about one decision and say, okay, this is what I feel like doing. No. But there are some stipulated rules to be a qualify or be for which side will call. Dear can wasem. And you marry so na your fat time kakra. Na you dig it deeper into a lot of the confusion out there about your can't deductions, yɛka tax credit. What are they? What are the differences? And what are some of the examples for the deductions, and what are some of the examples for credit? Yɛpɛ sɛ saa akwanya wei na yɛhyɛ ne nyinaa no with us. And the reason why we want to do this is that at any point biara no sɛ wokɔ tax preparer hɔ a, based on this information na wobɛnya no, it helps you to prepare better. Nti bi wɔ hɔ a sɛ tax preparer no, so you'll be obisa questions more about what situation now. You can share with a person, say, hey, maybe me go school. Hey, maybe me wo enkodabi. Maybe hey, me wo fee, me wo way. Until based on that, and your tax preparer no can make an informed decision about the various deductions and the credits that you qualify for. Until enumerate no, yepese yema Yenua Isaac, Ebwayen, Neye into details about some of these things. No? And see, I found one by one. So the first one we want to talk about, tax deductions. And see, Dr. Ewa and Penny Isaac, see, a tax deduction, what is it? More to give us like an idea on what a deduction actually is. Then we go into the credits. You can see who you can't credits and so what are the credits and what impacts in the making our taxes. So then we'll look into the examples and details.
Yeah, I think so. Deduction net tax credit. No, obviously I'm not a tax strategist or a tax expert, right? But I do understand a bit about taxes. And I think whenever I sit with clients, a lot of times, when they're asking me tax questions, now for some reason the deductions and the credits seem to come up a lot, and they also know what is the difference. How does that work, right? I did the same thing, right? And sometimes if you don't know what you're seeing now, you're going to think that they're the same thing, but they're not, right? When you think about, I guess to simplify, right? When you think about a tax deduction now, it's pretty much, a deduction allows you to reduce your income to an amount where the government would tax. So, for example, if you make $50,000 per year, right, and you write off, let's say $10,000 in deductions now, right, you are now at $40,000, right? So the government is going to tax you on that $40,000 because you took off $10,000 of deductions, right? But when it comes to credits now, right, it's literally a dollar for dollar decrease in how much tax you pay. So, for example, if you make, let's say, $100,000 and you have a $10,000 credit now, and the end of the tax filing, let's just say you owe $20,000 in taxes. If you have a $10,000 credit now, you can subtract directly dollar for dollar. You can subtract that $10,000 from the $20,000 you have to pay. So you end up paying what? $10,000. So it's a dollar for dollar compared to a reduction on your income to the amount where you pay tax on. So I think the credit will have a lot more weight because it's a dollar for dollar, a reduction in how much tax you're going to pay as compared to the deduction, which is just simply to reduce how much of your income you're going to pay tax on. So I think if you can understand some of those basics now, it helps you to be able to really have a clear understanding of the differences between the two things. For example, so if let's just say you own a business, right? You can write off your gas or your mileage, or you can write off the business expenses, the office costs, lights, computer that you bought, your desk, your office, and you can write off and deduct a lot of things, right? That's what is oftentimes known as a deduction. And obviously, if you're a business owner compared to an employee, you have a lot more deductions you can have compared to what an employee will have when it comes to the deduction. So, Brother Isaac, I know this is your area of expertise, so maybe you can add more to what I just said.
Okay. Me did say, Bajo, say, Obiata Menkande.
Oh yes.
Okay, yeah. May GD say a basic understanding what putting across, maybe like in a different light, but talking about the same thing, credit, say because a tax creditor, an amount of money beer taxes are a cow day to the IRS, would ultimately free more directly. A man above from and then Dr. Waka said $1 for $1 and 7 funds as all they cut 5,000. Now I say credit of 1,000. That means a can audience say about 4,000 into bit material free more directly. Say a cut deduction so deduction here 7 funds or taxable income. In other words, see can I ever tax or so no. Now for the deduction no. Yetimi eti free mu ansana yaba calculate o taxes. Na I'm say work already say credits no with more with, and what that means in is tax credits are more favorable and as a much more beneficial and as a yaba say emphasize also a chain tax deductions. Mamanya very simple illustration. Yam fan say o taxable income and as a o income yebet tax on $5,000. Now or a tax deduction of $1,000. That means say free ma now taxable income will come down to $4,000. So to simplify the analysis, if your tax rate and I say you are in the 10% tax bracket, that means that your taxes are going to be 10% of the 4,000 right now, which is going to be $400. And when you had a deduction of $1,000 on a 5,000 taxable income, with a 10% tax rate, now your taxes you are going to owe to the government is going to be $400. Okay.
To be a parent.
Look, your viewers, let's say, we are all parents, so
Yeah, and he say, a taxable income of $5,000 with a tax deduction of $1,000 in a 10% tax bracket, or taxes are going to be $400. On the other hand, with the same scenario, if you rather had a credit of $1,000, in that case, assuming no deductions, but to a credit of $1,000, the same tax rate and as a tax bracket of 10%, that's going to be 10% of the 5,000, which is $500. But after that, you had a credit of $1,000. Now, your deduction, your credit. That means dollar for dollar, we can deduct that $1,000 credit out of the $500 now. A tax liability now. Now doesn't count to my IRS, But say what's 1,000 free, 500 more. It's about minus 500. That means the IRS is $500. Anything I can say credit, a home for so a more favorable change deduction. We go with the same situation. When the $1,000 was a deduction, we paid back to the government $400. But when the same $1,000 became a credit, we are getting $500 back. And the and so on.
All right. See, yeah, financial doctor said I must say for breaking it down. Here for baby I will share every beer no you can say yama by either online radio or YouTube or Facebook and all you can say yama kwaba to enumerate no yeah spending time talking about taxes, care about tax credit and tax deductions, Dr. Wu and Penny Isaac at breaking it down and my the difference between fairness and the two, who said back impact your income directly, which is the tax deduction, a boy to your income. So into 40,000, we were deduction of 10,000, at me income so about 30,000. The 30,000 as you see, I know I buy a Benjamin tax on. Who said credit and so say nyamia dom a be or me what child tax credit of like $1,000, but that $1,000 me tax liability and as I come a day RS and so 500 meaning say government better than 500 the end of sa but 500 na your credits na akano government besign at the amount in the form of a refund. Inti ye kowe mono ye for ye betia say why sometimes no beti no bi akwaye ye find is taxes like nipa no ni income ne very less obekwa akwaye taxes no na ono nkwan nya be 6,000 7,000 sometimes $10,000 refund when you back onkwan akwaye a wodi a waboka. So we beside who say why is that the case, you know? And see, there's so much that go into taxes to determine our tax liability. And some of these things na yebo bosso no. Yes, someone say no baby and we pay attention now. Well, how some of the things that impact your financing, your taxes, in paying for your say for the clarification, the explanation. The question out there is, do we have anything called like non-refundable tax credit? Meaning, sir, if the tax credit is more than my tax liability now, there's no way say the difference, mention in the form of a refund, but a better wash. So I kind of lose that tax credit. Is that possibility for that to happen? See, you're paying for so much me aboy on that side now.
Okay. And when lady to the other section of credits here, yeah, well, different types of tax credits. So they can kind of they're non-refundable. They're refundable, and they're partially refundable. And there are three types: refundable, non-refundable, partially refundable. They're refundable, no, na a basic illustration, big no. In other words, when you have that credit exceeding or tax liability now, the excess in now buying them out back as a refund. And they can a refundable tax credit. And on a very common examples, earned income tax credit. Earned income tax credit, may GDC as time goes, but normally, it's based on how much income you have earned from working. So, Juma keke as an employee now or any income no about more credit to home because you are contributing to the economy. But no, yeah, what thresholds to be as a income no draw and ya de so and ya de and only very favorable for mid like average mid to lower level income earners. Because your threshold will be from this income to this income, like between $4,000. In the answer, we income no cost and answer credit and so on. In the baby as you drew a now for the yard bit when you be in the earned income tax credit no. I am some for the most part, Now say if you munyan land on career and a bit more a lot of income. So much as a year, Juma for maybe ne annual income here 30,000, 40,000. I honor the multi-million income credit in the pa. Especially so as I will and crack nice as I say. It's just like a number of factors. So a lower income with more kids, you're not just what did you spend about 6,000 but the more the income or the lesser the case, so it is a consistent be another bit when you be. Ndubo say so in your corner, say be a school of person or so to me, Amy and income make a cry. Now for the so I say boka. Normally, it comes as a shock for the first time. Like if you be school or real school, after I say this can be the earn taxes man on first. Oh, when you're 10,000, 12,000, 15,000. For the first time, no, a buy okay. Just a why so eager say oh the same thing is going to be happening this year. It is of na and normal cause ko affiliate what the IRS cut and I say be a whole fund just $1,000. I say hey na yeah day now also now we check when after the 1 month tax planning strategies be a or brand income no cost no going forward about one man to me I know my and the refundable tax credits baby no back to a premium tax credit. I don't know normally I know yeah baby abandon ma low income earners ma and not to more moment to me in your insurance coverage and those common ones the refundable one and yeah the non-refundable so I don't know opinion seem they can't chire say I don't know say exceed or tax liability abandon to me from mama it beat is a child independent care credit I know your credit to be a say obi ayo dependence keke no o born o kano utumunya sa credit no take examples you say bia o mama te won nchen o papa te won nchen o ofa bia na say bia like una na bi te won nchen they don't really have to live with you sometimes maybe what pedan bia like omo team but if you be sure omo obi no re mo obi clean mo omo sa e kani na ana say bia o akra la ko din be ko day care e bia after school care sa and no man kitchen na e boa ma timi engage akwara ma timi nya kwan ye adwuma no I don't know you are able to earn something that we call it a child or dependent care credit also. Yeah, I mean, time we share annual, but for each dependent, up to $3,000. So for 2 dependents, $6,000. But it's a percentage of those amounts, and it range from 20% to 35%. So I believe it's up to about $43,000 and beyond, I think that up to $43,000, you can only get the lowest end of the percentage, which is 20%. But if you work on that, just and also no, and yeah, what retirement savings credit, if you 1 year till of 401k, and it's how or match, for the most part, also based on your income. Normally, your income also be those credits.
Yeah,
but also to be credits or any mortgage interest credits, and all those are non-refundable. In other words, based on your income in rupee, but I know bro a kana would in taxes and also about buying from our back, unlike an income tax creditor. I don't know about a bit in our back, as a refund. And you're partially refundable credit. And a very common one the charters credits, and I don't know, it's only refundable up to $1,400 or $1,500 per child. And those are the basic types of credits, refundable, non-refundable, partially refundable.
All right, Penny Isaac, that's a year for taking the time, now 1 million. So the differences, and especially like the benefit of your friends, your taxes, near there. Say a lot of us, and you, in fact, from beginning, Penny Isaac, you rightly said, Uber Chrome have for I mean, because there's no way so Uber Chrome have. Now Uber drew no first job would be 50K. Sometimes it's impossible for that to happen. Into where there the income will be low. And the income there low into what taxes you are making by only a busiony nana by one way name Kodamian into income was low. Your quiet taxes no yes bebre. Your Tunyako Tasa sending your mouth Ghana, your shall see a sit down. Into the mistake a lot of us we make is an idea near to so for every year, sir. Is a guaranteed because your bedroom will be the share you say sɛ wowɔ nkɔdaa a wonya sika seesei ne sei nti ɛfɛ deɛ mekan no w'adwuma akɔ soro income na akɔ soro wɔ yere nso astate yɛ adwuma ɔno nso ne income akɔ soro yɛka income ne mmienu no bɔɔ mu a no ɛfɛ deɛ unfortunately no you don't even qualify for any income credit no nti wokɔyɛɛ no instead of like 6,000-7,000 na first na wunya no sisi a na fe de wuti anye ye we break even or ebi okra waboka because me can no with W4 na wo fill in one fill in a year because wo yera fill say or dependent me ansa wo so wa fill say wo so wo dependent me ansa until at the end of the year no ye be ka bom no efe de ye hu say obia no wo mu mienu nyina na mo ye dan me wo miensa no and not miensa here miensa there na efe de create problem bebre your friend say e dey am in fact a tax season will be free me free Virginia you hear another tax preparer adan why for the first time or call you saw the 2,000 and I'm saying now then of course within the year and I just all catch them so cash in the 401k b and who maybe bring them say look yes first but remember society now we no it changes everything for you into 2,000 because it could have been worse. These are some of the things that anytime we go to our tax preparer near there, no, and I always tell people say before you even cash out your 401k, no, let your tax preparer know about it. Let them know about it. Now, among guiding you in the right direction, if not, we will say your friend is saying, would they a cababre. Nti Penny Isaac yadawase for breaking it down for us. Nti Dr. Ewa yabema there if you have something to add and as a real life example you want to share with us, so yeah, you can do that now.
Oh, thanks, Brother Isaac. I'm breaking it down perfectly. You know, there's really not too much more you can add to that. I think he did a very nice job making it very simple and also giving examples to explain, you know, the whole thing. So I think there's nothing really more for me to
add. Okay. So before I go on to the next one, Penny Isaac, something to say before?
Okay, yeah, I think the not more kind of see a dream CBB. So on say concepts you know not near the food tools come home.
Yes.
So on say very important to say the initial years na ebia o income no cost na ubitmenya tax refunds akakraka no ana emma wa wi nye o say ebe to so forever until that time no so investment be a try and make sure I think say you can financial planning once and be you can budgets near the our platform you so try na assuming say senkasa 10,000 15,000 refund kwasa ma nkabe survive regardless the horror na also ultimate meow because from no and to other do maybe after there was no be and I say fast forward so I say a do timer some go for income cost na say omuntimi enya sa refund ni bi normally no ho na omo try say omo be cut corners na still omo say yes ka no na bo say was oh minim Nigeria ni we minim we hwe on the so kwa omo just ka bibiri minim we we ko omo just ka bibiri na bo say actually the issues bro just because I one a sentence tax season, you know, it will be a cocoa season forever. And the initial is kind of unya and abia so her su ukrana abia nani air breeze kind of more but it's not going to be like that. When you start earning more money, when I also to me looking for a tax and as be a financial professional. Now we're planning throughout the year. So that we are any impact on your taxes and a be quite minimal na more. Baby, and also account for 401k so once a very very important so I say I don't know say you know normally you know say only 59.5 years and so could use free man you charge you penalty and a interest as well. And but was a during COVID season, you know, or waive penalty, no. Penalty normally on 10% in additional taxes. I don't know. As I be a car or the IRS on. And I am a very important to say. You bet me. I should show me before, and I hear what other mitigating events are. As I net COVID, you know, corner a wow mean to mean charge penalty, no. It was a would you can find out. So if it is for some of those situations, for instance, CBA, what was your Nibia? And Ghana, where Ghana, like a being here, can be a year, a crew, Ghana. I don't know. So to me, this can be free for 1K my yen charge penalty be another instance here. Memphis be a one medical situation be not is care one and ya they like be to take care of it. I don't know, so use can free for 1K ma yen charge any penalty is your no be or I don't know say see and to make sure say over 600 man say as so kuina say the people we are now for our case of new tax paper. One Timanyo homework.
Yeah, that's a very good point, Brother Isaac. And one thing I want to also add is the fact that just because you were getting a refund 3, 4, 5 years ago, it doesn't mean, like you said, every single year you can expect to get the same refund, right? Because life changes. Right, you know, your family increases, your expenses might increase. You know, you might make more income. Maybe you might make more significantly more income. You know, so there are different circumstances that impact how much refund you can get. And I also want to stress the point that let's not be so happy about getting refunds, because if you think about it, if you get a refund, whose money did the government give back to you?
Your own money.
It's your own money. When they give the money back to you, did they say, hey, you are such a nice guy, we'll give you interest on top of that? No. They gave your money back to you, the same amount you gave it to them with no interest. But if you owe the IRS money, do they charge you interest? Of course. So that's why it's so critical. See, don't waste the whole year and then wait to get a refund. Figure out, right, how to adjust your withholdings with a tax advisor so that if in my position, I don't even want to get a refund. I'd rather I either get, even out at zero or I owe. Because why? That means I had access to my money the entire year to build wealth or to take care of my bills or my expenses. Instead of giving it to the IRS the whole year and then they give it back to me and say, okay, well, thank you. Because when you give it to the IRS, what do you think they did with it? They used it to their benefit. While you were struggling the whole year to save money. And sometimes when I sit with clients, right, and they want to invest money, they have a lot of debt. They want to be able to pay for their kids' education, but yeah, the kids say, well, I don't have enough money to do these things, right? And I always ask them, what is your average tax return for the past 2-3 years? Oh, 10,000, 15, 12. And I said, think about that. You mean to tell me, imagine if you are just withholding, and like now you are not getting any tax refund. But yet now, that money that you're giving to the IRS the entire year is coming back to your pocket. What could you do with that money? Right? Because think about it. If you're getting back $12,000 in refund, that means the entire year, that $12,000 could be in your own account. Imagine if you were investing that money for the entire year. If you were paying down debt entire year with the same $12,000. If you were putting that money for your kids' education, what difference can that make? So let's get away from all this excitement about tax refund. If I get tax refund, that means I did something wrong. Because why? I would rather have access to my money the entire year as opposed to giving it to the IRS, paying extra to give it to the IRS just for them to turn around and hand it right back to me and say, okay, Prince, thank you very much for letting us use your money, but we don't feel that you're worthy to get your interest. So it's really how we think about this stuff that needs to change, right? We are so accustomed to refund. We feel, oh man, I can't wait for my refund. You cannot wait to get money back that you gave to them for free. It makes no sense. Right? So let's really change our thinking and let's look at strategies that will allow us to either get at zero and have access to our money the entire year, or actually even owe and pay the IRS back a little bit of money. At least you have more money to work with the entire year as for your benefit, for yourself and for your family, compared to the IRS benefit, right? So
yes, Dr. Wa, that's it for in fact, yet here for Sanya. Yeah, kind of some of this information, like we said earlier on, we are very passionate about it. Into the sharing no, sometimes will be hard, but all because you person sinking home, not just some of the mistakes are no, your friends your best send through. Until in for your more say, until see who some of the examples for tax credits. Until right now, no, you person who. What are some of the examples also for deductions? Because who said deductions, what it does and it's until your total income. So, as an individual, what are some of the deductions may qualify for? I bet me aboa me at me income so na me tax liability so I less. Na yet for so who the difference between some of the examples in the difference between you can establish that, but now we want to know the example of deductions into impending for so between aboy that side now.
Yeah, before we jump into deductions, let me say the Dr. Walker is here a very important point. I believe so. See, it's making a very good note of. Nana may come be kakra.
Yes.
Anna, the way I see it is a personality. I believe that people have to mature to understand, and for the most part, initially, it's very important. Someone say, assuming Zibi and Kabi claim a zero, near two taxes be said about being a refund. If there is one balance by claiming maybe 1 or 2, like also to analysis now, the be between more break even now, Uncle Boka and Bibisa. Na Sano say a toka crabia, the excess now, when be the account paycheck about to bank account. So bit me the year investment, we answer bit me the be meaningful. So on in finance, very common jargon be say $1 today is worth more than $1 tomorrow. In other words, because of inflation, the $1 bit the same dollar in Timinye. And if you are leaving your money with the IRS for a whole year, maybe as hard time now 10,000, not inflation about 2,000. Maybe 8,000, but maybe as Anka Ukipu says during the year can benefit from the whole $10,000. $1 today is worth more than $1 tomorrow. There are some people that say about investments or more risk averse. They only want to take any risk. Say and I would normally advise my clients to say, just as said now, Dr. Work if there is something very meaningful, idea being very important. So bit may just say or withholdings, so more income coming into your bank account during the year. Now the yes hard a investment be a bit in the Romania interest and as be a bit many dividend as be and for so be like an okra circle bar says Oboka Caribbean and for so
yeah.
But a personality said American because most people know they don't want to go through that hassle. They rather wait and get a big refund. So people have to mature into understanding that. But a very important say you have to also achieve them.
Yeah, before I went to us, this point here will make it, I mean, when you talk to a lot of, especially Ghanaian a year, almost, this is my savings. That's my think of will tell me the exact same thing. So, my savings in it. And because sika no beto me account mu amedi sika no to my account and be say into we no it's more like a savings into at the end of the year na minya a offense of 4-5,000 na and I'm say a chrome ha and fan alcohol say we savings wunya interest also.
Absolutely.
Oh, even says Canada like a regular savings account na wunya 0.25% increase na it's still something. Oh, at the end of the year, so $50 na wunya it's still more than IRS for a keep it for you with nothing coming in. These are really good and valid neoma. Our hope and it's yet for 8 years no. Say be what fall into that trap maybe listening to us what na what changes certain things in fact care about I think budgeting kind sometimes it's very difficult for us to save because sikani nya beto account in more over spending it right away. Internet establishes but more than maybe open a separate account somewhere. Now no directly from your paycheck, my employer, you can go to one person will pay you whatever you do. And they say every paycheck be maybe $100. You can go to her mommy. Oh, it builds up. Now who you sue at the year your best say yes answer way na your firm waba nemo nyoma nketenkete adjustment say no you bet to me your friend say in certain areas. So I think so we are coming close to your time and your big giant platform and I'm saying you deductions and some of the examples we'll pick it up next week in wrap up your tax discussion and yet to me and move on to your friends and other topics. Penny Isaac, Yabema Wama closing comments and so far no credits now you can't want some maybe something also came into mind I say I share with our viewers which you me I can summarize it.
Okay. So the I can credits I am more favorable chain deductions na very important say men fancy be a say tibia at least unim say school during the year you are entitled to some credit whether a bachelor's degree and a grad school being a master's degree and a PhD and any kind of school be of trade and of a vocation be you are able to earn some credit like there for the first of college, the American Opportunity Tax Credit, and for the Hope Credit, about 2,500 up to that, and the lifetime learning credit. Anyway, anything after a bachelor's degree, and also about up to $2,000. And like couldn't say beer, so or nanebu or for beer, ebia ocean and so tone chance, ebia wapa be a manatana. A cow born on or more motion a cow utiano. You're able to get some credit over daycare after school child care and it's under marketing kitchen. You're able to get some credit on or 401k or match or contribute to based on your income, you're able to get some credit. Or mortgage interest sometimes like your credit. And very important to say you're quite a tax preparer as well. Now, so Musa Kwana, narrative event a course during the year. Actually, for the most part, is they're able to say, okay, and based on this, you can get this credit and if I found document for Webra, Koban school or Kwaje, a document, maybe like a chair, it's casting out for even daycare. Tax ID also Fabra and Menfa and more ammonia credit and so many more they're able to help and as we can even say okay me say Mrs. I me water heater not the Mekoto any energy saving. Can I get any credit? Yes, there are some credits. Credits and those will be option when you adopt their credits. So business even when you construct a disabled, pathway, there are credits. There are a lot of credits. And narrate your business story for the year, narrate your personal or employment story for the year, and business will be a creditor. For the most part, and when they know what they are doing, they can help you find out which credits that you're able to get.
All right, Penny Isaac, that's it. Yes, Dr. War, your closing comments.
Yeah, I mean, I think so. Once again, Brother Isaac, a really nice job kind of breaking things down, simplifying things, and giving all that detail about what people need to do and focus on. Being able to narrate, your events throughout the year so that it's easy for your tax preparer when the time comes for taxes. And also, don't make decisions based on fear, right? Just because you don't understand something, I mean, you shouldn't go and learn about it or go ask questions about it, right? And also, don't get accustomed to comparing yourself to your friend, your family, and looking at their tax return versus your tax return. Focus on what you have and discuss that with your tax preparer. Also, don't get too accustomed and don't get too fond of refunds, because refunds is just your own money the government turn around back to you, loaning for the entire year and not paying you any interest. If somebody loans your money for an entire year, you deserve interest. But in this instance, you don't get no interest. So learn to shift our way of thinking. That'd be very, very helpful. And also avoid having to switch tax preparers every single year, because you now begin to raise red flags to the IRS. Why do you keep switching your tax preparer, right? So find somebody that's good, stick to that person, and then learn from that person over the time. Yeah.
All right. And for and the last moment Kai said these credits now can't there is an income threshold. Would drew baby income drew baby some of these credits you wouldn't qualify for this credit. Would drew baby now prepare and can say you don't qualify for any income credit. With tuition credits in the crown is to see a SWAT instead of the 2,500, and because of income percentage in your working if you are $500 now we are 600. Understand that, because income plays a major role in terms of how much credit ubenya yedamwase enwumre se munya daje na money a year sa adwumade nti Dr. Wa yedawase Penny Isaac and so yedawase nti until next week nyame enkai na ho no nshrai. All right.
Okay, take care everybody. Bye.
Okay. Mm-hmm.